Hello and welcome to The Trade. Before we get into the charts, let's have a quick look at what traders are watching. Well, the world should watch out for three possible bubbles in financial markets, according to the head of the World Economic Forum, Börge Brand, saying that we could possibly see bubbles moving forward. One, he says it could be a crypto, second, AI, the third would be a debt bubble. He pointed out that governments have not been so heavily indebted since the end of World War II. US services sector activity increased to an 8-month high in October as new orders grew solidly, but subdued employment pointed to lackluster labour market conditions, this according to the ISM survey. And the ADP private payrolls report showed employment rebounded by 42,000 jobs in October after declining by 29,000 in September. US Treasury yields rose following the jobs report, while a Treasury refunding announcement indicated potential future increases in long-dated debt issuance. The US 2-year Treasury yield rose to 3.63%, the 10-year up to 4.16%. And the US dollar index was unchanged on the day, the Aussie dollar pushing back above 65 US cents. Let's get into the technicals now with Zoran Kresovic from Blueberry Markets, who joins me now, and kick it off, I guess, in the moves that we're seeing here in the dollar index, Zoran.
Yeah, so we're seeing a US dollar going from strength to strength, Julia. Like, it's actually quite impressive, to be honest, having a look at the chart and seeing that it's been 6 consecutive days in a row where US dollar is actually gained momentum and continue heading higher, especially after that Fed interest rate decision on 29th of October. So that seems to be still flowing through the charts, and bullish sentiment is actually continuing to prevail and dominate right now. But in saying that, what I have to mention is that the major resistance level that's actually in the blue dashed line and around that $100 level is actually providing perhaps maybe a bit of a resistance at the moment, and hence we're actually today seeing a bit of a backdrop of stallment and retracement, especially that it's actually touching that 200-day simple moving average as well. But nevertheless, the trend actually continues to head higher. It's heavily influxed by the news that's actually come out last night with regards to the ADP numbers that are come through higher than what market anticipated at 50 versus 52.4, I should say, versus the September 50, and ISM manufacturing PMI as well, which is actually provided a bit of pushback on further interest rate cuts that might be coming through in the month of December, and on the back of that, US is actually gaining quite a bit of strength.
Let's turn to our market then, Zoran. I mean, a good session today, but we were hit hard over the last couple of sessions, down over the week, and about 3% low from all-time highs. What are the technicals showing you?
So that's an interesting point, Julia, that you're raising, because we've seen a heavy influx of obviously NASDAQ and tech sector in the US actually rebounding from prior days lows and gaining quite a bit of strength and momentum, and the same happening in S&P 500. And obviously that's kind of prevailed in our market as well this morning, with all 11 sectors being up. But if you have a look at this chart, we can actually see the ASX is quite struggling to break that all-time high in 9,122. And whilst it had actually quite a significant rise and, like upward channel in the blue dashed line, he actually couldn't hold and quite retraced for the past few sessions. Now, in saying that, we are actually seeing a bit of momentum today. And, if we were to continue head high and challenge that all-time high, we actually probably need a backdrop of good news coming through in our market. Now, what could this be? Well, given the commodity sector is actually flourishing and doing quite well, and if there is a fair bit of demand and coming out of China specifically, then that could provide a bit of headwinds for ASX actually to continue head high as well. Seasonally as well, we're actually going into the year end, which generally speaking has actually performed quite well for ASX 200, and then hopefully attract some more of those investors that are actually looking for income and yield as opposed to growth, because we as we saw on numerous occasions that generally speaking global equities are quite overvalued, and whilst earnings have been actually quite good, the valuations are quite high, and there is probably a limited upside in the short term in terms of the gains.
And what's happening with silver, Zoran, coming off all-time highs? What are you seeing in terms of where it heads next?
So that's also very, very interesting dynamic, because if you have a look at the US Treasury yields on both 2-year, 10-year, 30-year overnight, we can actually see that it's actually gained the momentum, and on the back of that, US dollar has actually gained quite a bit of strength as well, Julia. And normally what that would actually equate is for both silver and gold to come off and depreciate, or at least in the short interim. But what we've actually seen over the past 24 hours, that silver and gold have actually gained momentum, and we can see here the silver is trying to break through the major resistance level of $50, and whilst it's actually not quite there yet and finding a bit of resistance, we might still have to be a little bit more patient when it comes to this one. The uptrend is still fully in play. On technical aspect, we are seeing a bit of a ABC pattern, Elliott wave pattern that's actually unfolding, and we could be heading a little bit lower, to be honest. My next level of support on silver is probably around $42 for a number of reasons. Number one, because there is actually quite a bit of natural support there, and number two, there is also a slight gap on the chart as well, which could at some point be filled. But we're in this sideways rectangle pattern right now. We're still probably picking, traders are picking the direction. Whilst it has retraced probably 10 to 15% from its all-time or most recent peak of $54, I would still anticipate and expect both silver and gold to actually come off and continue retracing over the next week or so, and especially on the backdrop of US dollar gaining strength and a risk on sentiment prevailing when it actually comes to equities heading higher as well, especially into the year end.
All right, Zoran, really appreciate it. Have a great day. Thanks so much, Zoran Kresovic there from Blueberry Markets. That does it for this edition of The Trade. Be sure to join us next time.